Will the market crash again? Watch the US greenback for clues. One of the largest riding elements at the back of the market's current massive sell-off used to be the jump in the US dollar. Daily News Report explains why the rate of the greenback thinks so much, and why buyers have to preserve an eager eye on it. We have mentioned the mini crash rapid correction in the Nasdaq index pretty a few instances over the previous week or so. One component we haven't cited tons although is the most apparent using pressure in the back of the sell-off. That is the unexpected rebound in the US dollar. Why the charge of the greenback things so much? As I've cited earlier, then on many occasions, the value of the US greenback is arguably the most necessary fee in the world. Dollars are varied in the most cross-border transactions. Dollars are the closest issue to a universally commonplace fiat forex that we have. The greenback is the world reserve currency. Almost everyone varied in any type of change wishes get right of entry to dollars. What's the price of the US dollar? Well, it's something. It prices you to purchase it when you don't have any. So for a British man or woman, it will be the pound-dollar change rate, for example. You can get a thinking of how the greenback is buying and selling towards the different massive currencies via searching at the DXY index. This appears at how high-priced the greenback is relative to a basket of currencies of its largest buying and selling partners. When the DXY goes down, the greenback is getting cheaper. When the DXY goes up, the greenback is getting extra expensive. If the greenback is getting cheaper, its capability is less difficult to get preserved of. In different words, a weaker greenback efficiently acts as a stimulus for the whole world. If greenback coverage is loose, then world economic coverage is loose. This is solely a moderate simplification. You can already see that the Federal Reserve, America's central financial institution, has embraced the position of world liquidity issue of closing resort. That's a function it started out to comprehend it had at some point of the 2008 monetary crisis, and it's one that it has unquestioningly ordinary at some point of COVID-19. The Fed didn't simply make certain that cash was one slow cost for Americans. It made certain that wobbly distant places markets should get keep of as many greenbacks as they wanted to via swap lines, which we don't delve into proper now. Anyway, you with any luck get the point. All else being equal, when the greenback is expensive, it's a signal that it's getting tougher for anybody around the world to get preserve of money. In turn, that's no longer exceptional information. For chance belongings, tighter financial coverage generally makes shares go down. So how does this all relate to what's going on proper now? How the more suitable euro helped the Nasdaq's stellar run greater in August. Earlier this year, the European Union managed to agree a deal on a joint COVID-19 recuperation fund that eased fears that the EU was once heading for every other huge shouting match, and as a result helped to raise the euro. A rising euro will have a tendency to imply a weaker dollar, as the euro is the second most widely used forex in the world. Tough second area is a very long way in the back of first. The euro surely broke greater towards the dollar from about mid to late July, which is when the deal was once in the end signed off. After the traditional late-night time marathon conferences, the euro then hit its most latest excessive at the stop of August. You might also be fascinated to observe that this identical length from mid to late July to the cease of August coincides with an really hysterical run greater for Nasdaq. That all modified as September broke. Why? Well, at least one purpose is due to the fact the European Central Bank commenced to get twitchy about the alternate rate. Here's the problem. The world is locked in a foreign monetary war. It's a quiet war. no one admits that it's going on. But absolutely everyone wishes a weaker foreign money due to the fact it helps to improve inflation, in concept at least. And Europe arguably wants it greater than most due to the fact it's suitable for exports from Germany and useful for tourism in the southern international location. Not that there is a great deal of the proper now, unfortunately. So whilst a rising euro would have been welcomed at first, it's a high quality void of self-assurance. If it receives too started too fast, that's an extraordinary matter. As a result, we begin to get mutterings from more than a few ECB participants that whilst they don't goal the euro alternate rate, it doesn't matter, which is a best way of pronouncing actually the form of the goal the euro alternate rate when we are searching at it proper now. It turned that supposed traders had been edgy going into the ECB press convention yesterday. They questioned whether or not Christian Lagarde, modern-day boss of the ECB, will take the danger to push the euro down, both by means of hinting at future action or simply jawboning, appearing as if she was once about to do something. That's the type of element that Mario Draghi would have done, but Lagarde used to be having none of it. If she's stricken about the euro yet, she didn't exhibit it, and markets being markets took the absence of a no to suggest go ahead, so they dispatched the euro higher. In turn, that weakened the dollar, and it helped to raise riskier belongings, precious metals included. Now that would possibly now not last, but the truth that the ECB crew hasn't but determined to step in suggests that would possibly be similarly for the euro to go. Capital economics reckons there is scope for modest in addition appreciation. There's nothing specially scientific about this, but as you can also have gathered, markets themselves aren't especially scientific either, and it's beneficial to have easy warning signs to reveal. It helps you to sense on pinnacle of what's going on, which does minimize the temptation to panic and overreact. So hold an eye on the US dollar. If it turns out decisively, then that's probable to be awful information for markets. But till then, it appears pretty feasible that the Nasdaq slide we simply noticed would possibly be over for the time being. It may no longer saw a proper return up, and September is a sticky historical month traditionally for markets. However, I genuinely wouldn't count on that. The southerly way is down. Most of the idea, comment, information, and criticism containing in these videos have been created by Daily News Report. Before making any important investment decision, use the information contained in these videos as a starting point for conducting your own research. If you make any investment or legal decision, it is advised to consult an expert before making this decision.